Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Wednesday the 16th of October here in London. I'm Caroline Hepker.
And I'm Lizzie Burden. Coming up today, UK inflation falls significantly below 2%, raising the prospect for more Bank of England rate cuts.
Shares in ASML extend their plunge as global chip stocks shed more than $420 billion in market value.
Plus, Donald Trump makes the case for huge increases in tariffs in an exclusive interview with Bloomberg.
Let's start with a roundup of our top stories.
UK inflation has slipped below the Bank of England's 2% target for the first time in 3.5 years. Consumer prices rose 1.7% in September compared to a year earlier, below expectations and down from 2.2% in August. Rabobank's head of FX strategy, Jane Foley, says the data sets the stage for the next month's BOE meeting.
I think that number does give the green light for a Bank of England interest rate cut in November. But of course, a lot of people were anticipating that anyway. And the most interesting thing perhaps from this data is what does it signal for December? Is there a green light for December? I don't think we can be sure of that yet. And I think the market pricing in terms of anticipated interest rate cuts sort of reflects that.
Jane Foley's analysis is backed by the wider markets, with the pound having extended its drop below 130 for the first time since late August as traders raised their BOE cut wagers.
Now, shares in Europe's most valuable tech company, ASML, have extended their plunge today after the firm booked orders worth around half what analysts expected. The maker of the world's most advanced chip-making machines lowered its guidance for next year and reported bookings of 2.6 billion euros. Bloomberg's Amsterdam bureau chief, Kegan Koch, says the sector is experiencing mixed fortunes.
The chip industry is experiencing some uneven times in areas such as artificial intelligence accelerators. Companies like NVIDIA can't keep up with demand. But in other sectors like automotive and industrial, it's kind of a prolonged slump.
Bloomberg's Kegan Koch speaking there. He and analysts across the industry found themselves unexpectedly scouring through the ASML numbers yesterday after the company mistakenly released its financial results a day earlier than scheduled.
Now, that fall in ASML stock price has helped to fuel a wider sell-off in the sector that's seen global chip stocks shed more than $420 billion in market value. The rout continued in Asia overnight, with Tokyo Electron sliding by as much as 10% and shares in TSMC also dropping. The negative sentiment around the sector comes after Nvidia's stock price hit a fresh high on Monday on optimism around their latest Blackwell AI chip. Since then, the company's share price has fallen by 4.7%, wiping close to $159 billion off Nvidia's market cap.
And there's more bad news for the European stock market. Shares in LVMH have plunged in early trading after a massive slump in demand from one of its most important markets. Here's Bloomberg's Tiwa Adebayo with the story.
Luxury bellwether LVMH is seeing sales tumble in China. According to the group's CFO, consumer confidence in the region is at an all-time low, sinking to levels not seen since the pandemic and hammering high-end revenue. Analysts had expected a small third-quarter gain for the fashion giant, but instead were met with the worst performance over the period since 2020's second quarter. LVMH's American deposit receipts plunged by as much as 10% after the announcement, as did the likes of Gucci owner Kering's. US rivals Ralph Lauren and Estee Lauder saw shares fall in New York trading too. In London, Tiwa Adebayo, Bloomberg Radio.
To one of our top interviews, former President Donald Trump has defended his plan to dramatically increase tariffs on foreign goods, saying the proposals would help to protect companies in the US. Speaking exclusively to Bloomberg's editor-in-chief John Micklethwaite at the Economic Club of Chicago, the Republican nominee for president and former president proclaimed his belief in the policy.
To me, the most beautiful word in the dictionary is tariff, and it's my favorite word. It needs a public relations firm.
The former president shrugged off the possibility that his proposed tariffs might disrupt supply chains or squeeze small businesses, saying that companies would rapidly return manufacturing to the US in order to avoid the levies. Economists argued that tariffs are unlikely to create the revenue Trump would need to pay for his proposed tax cuts for businesses and individuals. But the former president was also asked for his thoughts on the relationship between the Federal Reserve. And here's the US president.
I think it's the greatest job in government. You show up to the office once a month and you say, let's see, flip a coin. And everybody talks about you like you're a god. Oh, what will he do? I think that if you're a very good president with good sense, you should be able to at least talk to him. I don't say make the decision at all.
So Trump on the Fed executive relationship there, but he also moved the market when he was asked about breaking up Google, saying that he is not a fan and the company treats him, quote, very badly. Shares of Alphabet pared gains as Trump was asked about the company.
Well, those comments from Trump come as the European Union has prepared a list of US goods that it could target with tariffs if Trump were elected US president. Bloomberg has learnt that the bloc has drawn up private plans on how to retaliate against Donald Trump if he makes good on his trade threats. The Republican nominee has proposed a 10% tariff on all imports and a crackdown on EU regulators taking on US tech giants. The latest data shows that the EU imports 350 billion euros worth of US goods per year and exports 500 billion.
Well, those are your top stories this morning. On the markets, the Stock 600 is lower 0.33%. On Wall Street, S&P E-mini futures are flat. And in the US, the US 10-year Treasury yield is currently lower 2 basis points at 4.01%.
OK, so in a moment, we're going to get on to the markets more broadly, the tech rout, the impact of those comments from Trump in terms of the tariff concerns. But let's also get into the UK inflation story now, because inflation has slipped below the Bank of England's 2% target, which was expected, but it's fallen more than even was anticipated. CPI fell to 1.7% in September, the slowest pace since April 2021. Our chief UK economist, Dan Hansen, joins us now. Good morning, Dan.
Morning.
So a November cut then from the Bank of England now looks surely to be baked in. And then December, what next? What's the path for rate cuts in the UK?
Yeah, I mean, it's definitely the right sort of conclusion to say, because of this data, the chance of a December cut or back-to-back cuts from the Bank of England has risen. I mean, you've heard from Andrew Bailey a few weeks ago saying that he, if inflation continues to moderate, he thinks they can be a little bit more aggressive. I think you just have to be a bit careful when you look at the data. There is definitely good news in there. As you say, it fell on a headline basis by more than expected. If you look at services inflation, and that's what the Bank of England is sort of obsessed with, there was good news there as well, though a few of the categories that push down on services inflation are those that the bank sort of looks through. So airfares, hotel prices, they're volatile. So it is definitely a good news report. I don't want to sort of dampen it. It's just that there are signs in there that things probably aren't quite as good as the headline metrics suggest. So I think for us still, particularly with the budget on the horizon, I think quarterly is probably more likely than meeting by meeting, but no doubt the chance of meeting by meeting, at least for a period of time, sort of December going into the new year, the chance of them doing something like that has definitely risen.
Dan, gilt yields have taken a significant tumble off the back of these greater rate cut prospects. You're looking at the 10-year yield lower 7 basis points at 4.09%, the 2-year lower 9 basis points at 4.03%. An interesting ex-post from Vander's Viraj Patel saying that actually it opens the door to a 50 basis point BOE cut in November. What do you make of that?
I don't think that's likely at all.
Tell us what you really think, Dan.
I just think that would just be such a departure from their thought process. Services inflation, it fell from 5.6 to 4.9%. The long run average is 3 and a bit. So you've still got miles to go.
And where do you see it ending the year?
Bank rate.
Oh, sorry, the inflation rate, because there were expectations that it would be about 2.5%. But then given we've had such better than expected numbers across the board for headline, core and services on CPI today, where does UK inflation end now? Yeah,
so I think the rise to 2.5-ish is still baked in. It's baked in on headline inflation because of what's going to happen with energy bills. We know they're going to rise, like Ofgem have told us, they're going to rise by 10% in October. Sorry, they did rise on the 1st of October by 10%. Obviously, we'll get the data next month. So that is an energy price story. It's not an underlying inflation story, if you like. I think services inflation could end the year instead of close to 5, close to 4.5, sort of 4.5. So that's the sort of bigger news, really. But I think the pick back up in headline inflation is going to happen. It's not going to change how the bank acts. I think, the services, what happens with services inflation, and that picture will be the driving force, and they will look through what's going on with energy prices. It's been well telegraphed for a long time now.
Just lastly, what does this mean then in terms of Rachel Reeves and the budget? I mean, she is facing pressure on all sides. The warning from the IMF around debt in the UK, 100% of GDP, but then you've got people not wanting tax increases. I mean, she's being lobbied from all sides and has to come up with an answer. How does the economic picture in the UK now play into that budget that's on the 30th of October?
Yeah, I mean, the first sort of obvious thing to ask is whether this will affect the OBR's forecast for debt interest payments. It won't, because we've had a rally today, or yields falling. The OBR locks its forecast down quite early, so we won't get that sort of good news, won't sort of give any form of windfall. I think the broader question and the interesting thing here is the interaction between fiscal and monetary, because all this talk of black holes or a growth enhancing budget, which is it? If you think of black holes, you think of austerity, you think of tax rises. If you think of growth enhancing, you think of more borrowing and investment. I think on net, you're going to get a fiscal loosening. So if you think about what that means for the bank, that means probably a bit more caution in terms of how quickly they can cut interest rates. But I think bigger picture, I mean, if you look at sort of the inheritance, the near-term picture, I think, remains for Labour pretty good. I think the question, given what we've seen in all the confidence indicators and the like, is to ensure that the narrative around the budget is positive. Yes, we know we need tax rises. There is a spending hole there that needs to be dealt with. But the point is that spending's going to rise and taxes are going to rise. It's not that taxes are going to rise to fill a fiscal hole because the economy's done a lot worse. It's because spending's going to be higher as well.
So they're really conscious that they need to be responsible sounding. But what really surprises me is that even though they're hinting that they're going to change the fiscal rules, guest after guest sits in that seat and says that it would kind of be not worrisome for the market, unlike what we saw in the Truss era. Why?
In terms of changing the fiscal rules?
Yeah.
Because
why can Labour get away with it?
A big reason why, when you change or when you loosen fiscal policy, it's the narrative that matters. And if it's all about investment spending, there is a rate of return on that delivers potentially economic growth in the long term. And markets are much more relaxed about investment spending than short-term tax cuts that deliver a sugar rush to the economy or big increases in spending that aren't matched by tax rises. So a big increase in borrowing that's to do with sort of near-term boost to the economy. If you borrow to invest, investors are a lot more relaxed about that. So a lot of it is about the lever that you pull when you borrow more. And there is also, of course, the narrative that you sort of you spin with it. I think the narrative that was accompanied what happened in late 2022 was just a difficult one for the market to swallow, and we saw the reaction to that. This has been very choreographed, and it's very clear that Labour are extremely keen, probably too keen in some, you could argue, if you want to be controversial, a bit too keen to keep markets completely on side. I think they've probably got more wiggle room than they think. This.
Yeah, you're right. I mean, it is a very different situation. I mean, it was talking, the Liz Truss era was talking about abolishing the top rate, 45%, income tax rate and things like that. So, yeah, it seems like a different moment. But thank you so much for being with us this morning. Bloomberg's chief UK economist, Dan Hansen.
Now, let's also take a look at the most market-moving stories this morning. Our markets reporter, Valerie Teitel, is with us here. Looks like the ASML hit, Valerie, is continuing into today's session. A further drop of 4.4% for that stock, and it's impacting more widely as well.
It's really interesting to see how its impact was global overnight, not only on chip stocks in the US, but those in Asia. If we do look at pre-market trade, though, in New York, Nvidia shares are up 0.5%. So maybe a bit of hope that this slide in tech shares could come to an end in the US session. But note, we also get TSMC's results out overnight tonight and possibly late into tomorrow morning. earnings. So maybe another shift in narrative if we get something different coming from TSMC.
Yeah, absolutely. And China also a big part of the chips conversation, given Trump's comments, speaking to Bloomberg, defending the proposals to increase tariffs.
Yeah, those comments on tariffs are really keeping the market on edge. Just to note what happened, last time during the election 2016, we saw the dollar strengthen 5% in the days after that election. So this possible currency volatility very much on investors' mind. We've seen a spike in options traded in FX. Just goes to show, there is a lot for investors to deal with as we get closer to the election, because you have to take into account we also get that payroll report on October 4th, just 4 days before election night. So a lot of volatility out there for those to deal with. A lot of it's focused on the dollar just because of how strong his language was on those tariffs last night.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.